Folks, do you want to hear a shocking housing and mortgage data statistic? One that is accurate but may have you scratching your head? Well, Logan Matsushami from Housing Wire has correctly put out the fact that we've had 23, that's almost half a year of mortgage application growth week on week and year on year, and 10 weeks of double digit growth. How can this be? How can mortgage data be up 23 weeks in a row, year on year, and yet we have record low transactions? Do we just have a lot more people being denied? Do we have people putting in multiple applications? I have no idea. But we've got the one and only Jonathan from Convoy Home Loans, who will talk about his book of business, what he is seeing from his competition, and really figure out what the heck is going on in mortgage. Man, this is wild, Jonathan. We have record low transactions, but yet mortgage application data is screaming higher. 23 weeks in a row. That's almost half a year, brother.
Yeah, and I think the wildest part of all this is, if you're like, again, we always talk about the short-term memory of people with bad news, right? The
Mm-hmm.
market hasn't shifted in terms of rate wise that much, right? In if anything, the market as a whole, rate wise, might be slightly worse, right?
Mm-hmm.
But we've been pretty much flat, and transactions have gone up, as a whole. I think we as a company ourselves, just comparing from this year to date, like, we had the biggest months we've ever had in maybe company history in terms of units and volume in the
Now, just so
last
we're clear,
three
just so we
months.
don't split hairs, you're not talking application volume. You are talking closed
Um,
transactions.
Correct. Yeah. We're talking closed transactions done. So we saw this. Obviously, it's always a little bit of a trickle effect, right? We
Sure.
see the applications and then we see everything roll
Yep.
into the actual fundings. Typically, the turn time is like 30 to 60 days, right? Is kind
Mm,
of the window that we look at when we look back, right, at the
sure.
application starting. So yeah, we've funded and our average loan amount actually went up, right, during that time period. Our average loan amount is actually now up to like 850,000, right,
Yeah, now
across the
let's just
US.
remind people you do have a heavy focus on Southern California, which obviously has a very high
Yes, yes,
price, but
yeah,
still, that you do support the country, but you
across
do
the
have a
country.
concentration.
Yeah, I mean, actually, our third largest state when we were doing our Q2 review, it was California and then Florida, and then our third largest state was actually North Carolina.
Oh,
And then,
interesting.
yeah, and then because I think the averages, obviously California, you have those $10 million houses, whatnot. Boca Raton, same thing. Florida, but then you also then average out with like the hotter North Carolina areas, and then the Idaho and the Ohio, like those were actually our, if you're talking about three, four, five, six, states, those were
Yeah.
actually our higher states, and those average home prices are between 150 to 250,000. So
Yeah, it's really getting interesting because I'm already seeing a turn in the market. I'm calling it. We actually saw investors step up in Q2, right? When we looked at back at the last couple of years, this data is from Redfin. Investors were about 18 or 19% of the market. Last quarter, we were up to 27. Again, this is just what we keep talking about. Home buyers are retreating, putting their heads in the ground, but people that do the work, people that write disrespectful offers, we're making moves and getting great deals. This is why Convoy is crushing it, I think, because you focus on investors. Not that you don't help homeowners,
yeah,
but you do have a focus.
yeah, absolutely. And I think that the ability to pivot, right, is the most important thing, right, and do both well. I think the biggest part of the client options right now, being pigeonholed into one option, is probably the worst thing you can do, just because you can't, in this market, and we always talk about this, in this market, you can't just look at, you have to look at everything qualifying on the now, but you have to look at how it affects your future, right? You can't just look at it, I'm going to buy this at this thing and then be stubborn about buying it, at this price, at this loan right now. You have to kind of think about, if I'm looking at a 3-year term or a 5-year term or a 10-year term, where do I want to be? And does it align with the pathway that I'm trying to go? Right. Which is
Yeah.
why I think a lot of people have started making the move, and we've had, the highest number of units funded and all that, just because people are starting to wake up and say, okay, the market itself, whatever the news is saying, probably not the people to listen to. Let's just start making moves forward. and keep progressing forward on the market regardless of what it does, and make the moves we need to based on the now so that it improves for the future later.
Yeah, I mean, at the end of the day, I mean, it's very clear in why Convoy's crushing, because you have this investor focus. We want, and I want, less competition, more choices, and more motivated sellers. These next couple of months are going to be full of all of that. And I look forward to taking advantage of it. I know my community does. We are truly going to build some wealth this year. We're making moves. And then, oh, by the way, we've got a confused Fed. The Fed minutes are talking about cuts in July and also no cuts in 25. I think it's pretty clear that a September rate cut's got to be thrown on the table. So we may be on the cusp of lower rates. And I think it was Morningstar. Morningstar thought we would see 5.75% mortgage rates in 2026. So if you can write great deals that cash flow today with fixed rate debt, you never know. You might get a chance to refi later and even make it better. It's lots of stuff going on, right?
Yeah, absolutely. And if you want to pull forward, and this is the power of kind of being flexible with especially with the non-QM stuff that we're doing. If you want
Mm-hmm.
to pull forward that 575, that it might not be 575, but it might be 5875 or
Yeah,
6%.
close enough.
Like
Yeah.
if you want to pull it forward and have the future now, you can have that happen. And that's what I think a lot of people have been moving from, right? They're
Even better,
moving.
Jonathan, you could have the seller pay for it.
Exactly. Exactly. Yeah. Get some seller credits, put
Yeah.
it towards buying it down to a
Yep.
6% on a 30-year fixed, or 5875, whatever you want to do on that front. And then if you do it at that and lock it at that, then you can have that regardless of whatever the market does. You can just ignore the
Yeah.
noise, right? It
Yeah.
just becomes more noise. Yeah.
Yeah. At the end of the day, folks, July and August are going to be about disrespectful offers, seller credits, repairs, mortgage buydowns. This is the time to take advantage of it. Buyers markets don't last forever. And I think we might see a turn in Q4. So again, take action now. Jonathan, I want to talk about something that might be a little sensitive topic. Obviously, the mortgage industry has been taking it on the chin the last 3 or 4 years, clearly in a depression. Lots of people going bankrupt, leaving the business. But I am starting to see some, I don't know, I'll call it questionable behavior. One might even call it bad behavior. Why don't we talk about some folks in the mortgage business that are so desperate for business that they are starting to not act very well?
Yeah. I think it's kind of sad at the end of the day, right? Because at the end of the day, everyone just wants to make a living, right? And there's nothing wrong with that. Um, Unfortunately, the bad rap comes in recently just because I've seen so many people, and I've lost a lot of deals over this too, right?
Mm-hmm.
Where they are offered something, they get so far into process, and then by the time they try to, switch over or whatnot, it's hard, right? So I'm seeing this happen whenever people get their credit pulled, right? Now it's worse than ever. People get like literally a million calls every
Yeah.
time you get your credit pulled, right? And you literally don't have any privacy. And on top of that, people are just offering stuff that don't exist, right? Now, we do sometimes get clients where they're like, obviously, we put out there when we talk to you and put out on the ads, like, hey, we have 5875, we have 6%. And those are available. And we're closing loans there all the time, right? We don't advertise anything we can't provide to clients.
Mm,
The only thing is there's parameters, right, that fit in. So sometimes clients get a little upset when they can't fit those parameters,
right.
right? And then they get super upset on, hey, why can't I get that rate? And I'm like, hey, there's just parameters to it, right?
Yeah.
Um,
You got to fit in the box.
Exactly. But in terms of like, we're trying to make it so that we're trying to change the game a little bit so that we are advertising and we are pushing forward products and things that are actually available as options, right? And that's the key word, is it's an option, right? There's options on the table for that to happen. And unfortunately, what I'm seeing, especially right now, is a lot of LOs just calling and blowing up people,
Mm,
telling them that they can get stuff that don't exist. And I know it doesn't exist because we do so much volume in this
yeah.
non-QM market where like there's no way that this is the actual term that's being provided, and then they go through the process and obviously it's not true.
Yeah.
So that's kind of been, I think, a struggle. And again, we get hit up all the time. We get called from all the time from different loan officers at different shops trying to join the company or see what we're doing, trying to get our secret sauce. And a lot of times we just tell them, that it's just at the end of the day, we have to make sure that we're just taking care of the consumer, right?
Yeah, I love that.
That's what it has to be. Yeah.
Yeah, I love that. Again, one of the other things I'm starting to see in the industry, again, as we kind of have this spring of coiled demand that's just waiting, people are out there chasing the cheapest. And sometimes the cheapest really isn't, because again, in the mortgage business, you guys have all these different statements and numbers can be pushed around, and the average consumer does one of these a decade, and sometimes the cheapest is not the cheapest.
Yeah, and I think you almost get a little bit of what you pay for, right? Sometimes you have the cheapest. I've seen, obviously sometimes we get competition of, hey, this guy offered $1,000 in loan origination, and it's one guy out of a basement, right, doing it by himself, right? Then
Okay.
you don't get the full on service of, okay, well, you have a process actually that goes through the whole process and provides you with whatever you need to do, and the true options. If you just chase the cheapest, you're gonna get the cheapest, right? You're almost gonna shop yourself to death, right? Is what I call it, because that's what's been happening over $1,000 or $500 or $700 or $200, whatever it is, right? I think the best decisions that have to be made is cheapest the best in terms of what you need for the relationship building forward, right? Because there's
Mhm.
also a relationship factor to this as well, right? If you call any big company, right? Yeah, I don't want to name any names, but you call a big company, you call them, you're not getting the same guy every time, right?
Nope.
Those
Nope.
guys switch around, bounce around from shop to shop to shop to shop because they want to find a place where they can grow it, right? So you're not their priority, they're their priority, right? So that's why I always encourage people, you want to make sure, if you want to build a relationship, especially for the long term on,
Yeah, especially if you're an
invest.
investor, right? You're going to
Yeah.
want to do multiple transactions. That's, if you're a homeowner, you're going to buy your forever home and then you're
Mhm.
out. You do you. But if you're trying to get in this game, and because again, I've been doing this 20 some years, and I've had investors step up for me on many occasions, right? Go a little bit faster, do me a favor, um, bundle deals together. There's just lots of things that can get done as an investor. And if you have a relationship, right, they can pick up the phone and call you, text you, whatever. You never know when you're going to need that.
Yeah, absolutely. And that's the biggest difference right now, right? Between us and a lot of other people is, especially if you're from where at, right? Dustin and I have committed
Yeah.
to taking your
You take care
calls,
of everybody.
right?
Yeah.
So whether you like it or not, you're gonna speak to us, right? And then you're gonna talk to us and at least get our opinion, right? Whether
Yes.
it's and again, we are not afraid to tell you that it's a
No,
bad
you've
deal
told
or
many people.
no, right?
I've heard many
And
people reach out to me saying they said no.
and they get offended, right? But it's a part of what we do is we really stand up to that and saying the cheapest is not always the best, which is why we talk about non-QM a lot, even though we can do conventional,
Yep.
because we believe the doors open up so much further on the non-QM side for the average investor and for the institutional investor, where you have so many more layers to protect yourself, you have so many more layers to make it less complex to purchase a
Yeah.
property and invest and continue to building your portfolio.
Yeah, I love everything about this. The relationship with Convoy has been a lot of fun. You've helped lots and lots of people in the community. I get notes all the time. I love it when you say no. And many times you like you say they're upset, but it at least forces them to go back and look at the deal,
Hmm.
right? If the mortgage, let me just tell you this, folks, if a mortgage lender doesn't want to do the loan, that's probably a red flag for your deal. Let me just say that right now.
Yeah, and that's where again, what we talked about earlier, the desperation factor too comes in, right? A lot of loan officers are pushing deals on people that they are desperate to get closed, right? It's like real estate agents sometimes that are in desperate and tougher markets. They just want to get the deal done, right? But the difference that I tell every single client, no matter who you are, I tell them, I don't care, right? Whether you do the deal or not with us, like we're not struggling, we have enough volume. I don't care, right? I just want to make sure that you're doing actually what's best for your situation and actually fits your goals in terms of the investing side. And I think that's the main important thing. You want someone on your side that's going to do that, whether it's us or Matt or whoever else on the channel. You
Yep.
want those people that actually are going to be there to back you up, where you can pick, if you can't pick up your phone and like you would talk to an attorney or whoever, if you can't pick up the phone and say, hey, I have this in front of me, is this a good yes or no, and you have to wait in the queue and talk to 15 other people to get to that person, that's not a relationship, right?
Yep.
You want to
Agreed.
have the ability to make the decisions. You can actually make decisions quicker having calls, and people from the channel call all the time directly. They text
Yeah.
me, call me, is this a good deal? Can I do this? And I tell them, hey, this is what it looks like right now. It probably is not good to move on this thing, or hey, it looks great. Like, let me throw you a pre-approval, submit an offer, right?
There
An
you go.
aggressive offer. So
Yeah.
that's the type of thing that as an investor, as a buyer, will help you stand out amongst other buyers, I think, rather
Yep, for
than
sure.
just any normal buyer that's just looking for the cheapest.
Yeah, well, let's close on
Yeah.
this topic of opportunity. I know you have a lot of investors who have decent sized portfolios. I'm wondering what the big boys, medium boys are doing now, not the one and done, but what are the big players doing? You can't have record company months without the big boys stepping up, which is what I told people was going to happen. But I'm curious what's happening in your book of business.
They are, one, buying portfolios, like blanket portfolios,
Oh,
in the
nice.
most aggressive, I think, price cuts that I've seen. um we're seeing portfolios of 20 loans, 25 loans, 30
Mm.
loans of different properties that are all, probably 100 to 150,000, maybe 200,000 per unit.
Hmm.
And they are just buying those up like crazy, right?
Wow. So
And
you're getting people to do what I'll call a portfolio or a blanket loan.
correct. A lot of that. And then also a lot of refinances, cashing out from what they own currently,
Yeah.
right? And we've already talked about this, right? If you have to have the money ready in order to make
Yes.
a move. You can't, like, no one is going to wait for you to get the money ready and then make a move, right? That still doesn't fly in this market. I think where you're able to really make an aggressive offer, and I've heard you talk about this on the channel too. I'll make a cash offer. I'll make,
Yeah.
an offer aggressively with big down payment. That's kind of what you want to be able to do and be ready for. So what we've been seeing a lot is second home loans are actually, like, second loans, not HELOCs as well, but like if you're just doing like a DSCR second or a bank statement second or something, those rates are down. Those rates are in the 8 and 9 now for
Oh my
investment
goodness, they're
property.
sub 10?
Yeah, sub 10
Wow.
for investment properties. If your LTV is good and you meet it, that to income ratio on,
Now,
like,
just residential or commercial as well?
one to four units.
1 to 4
Yeah,
residential. Okay.
yeah.
That's fine.
But that gets you, right, cash available. So we've been
For
doing a
sure.
lot of those. We've been doing a lot of just investment property refinances where it's, hey, if I have like 20% equity, so they're at like, 55% or 50% loan to value, pull out 20% from here, 20% from here, 20% from here, and just refinance the whole thing because
Yep.
blended rate still is lower,
Yep.
right? If you do
Yep.
the calculation. But if you get that 20%, all of a sudden you're sitting on a pile of, let's say 600, 700, $800,000, and you
Mhm.
can make those aggressive offers. And I think that's kind of where people are coming into, they're finally coming to realization that if they pull out the cash now, they can have it ready to
Yeah.
go to pay the next thing. And the best part about this is, obviously, I don't like to sell clients or tell people like, hey, bank on the 2 months of free mortgage skipped payments or whatnot that a lot of people like to do, right? A lot of loan officers like to throw that in there and
That's
say
funny.
you're getting free months. It's not free,
Not
right? You're
free.
paying you're paying the interest. But, right, having a little bit of the lapse in payment if you are making a move within the 2 month period with your monthly budget may help. So
Yeah.
that's the only part. Time is what I tell people. I don't tell people about the, hey, skip 2 months, add that into the savings. It doesn't
Yeah.
make sense that way. But
Yeah.
if you are, but that time in between where you have, let's say, 2 months to make a move, that'll give you a good opportunity to make a move, purchase, do what you need to do, then continue the ball forward.
Love it. If somebody wanted
Yeah.
to start this process with you and see what's what, see what you can help them with, what do they do?
Go to convoyhomeloans.com and let us know you came from ORAC.
Yep, folks, let me know it came from Orat because, again, you get this young man or his partner, Dustin, and you don't want to wait in a queue. Nobody likes a queue, and these guys take care of you. Thank you, buddy.
Thank you.